Elon Musk bought a company for $44 billion, and it immediately lost half its value. Jeff Bezos spent $165 million on a painting. Warren Buffett owns a private jet he calls the indefensible. Are they just terrible with money? Not at all. They're geniuses. While you might be trying to buy things that go up in value, the ultra-wealthy are deliberately buying things that lose money, and it's making them richer than ever. It sounds crazy, right? A billionaire can buy a $50 million yacht, watch it lose $10 million in value in the first year, and somehow end up $15 million richer because of it. This isn't about being wasteful or showing off. It's about a legal money hack that most people have no idea even exists. But here's the twist. The same tax code that lets billionaires buy depreciating assets to save millions is available to you too. You just need to know how to use it. Let me show you exactly how this works, why the government actually encourages it, and how you can start using these strategies yourself. The secret is called depreciation, and it's one of the most powerful wealth-building tools in the entire tax code. When a business buys expensive equipment, vehicles, or property, the tax law allows them to deduct the declining value from their income over several years. Think of it like this. You buy a $100,000 truck for your business. The IRS might say this truck has a useful life of 5 years. So they let you deduct $20,000 from your taxable income every year for those 5 years. If you're in the 35% tax bracket, that $20,000 deduction saves you $7,000 in cash on your taxes annually. But here's where it gets really interesting. What if that truck doesn't actually lose value that fast? What if after 5 years it's still worth $40,000? You've received $35,000 in total tax savings, and you still own a $40,000 asset. That's a $75,000 benefit from a strategic loss. Most people miss this next part though. The IRS has something called bonus depreciation and Section 179 that can let you deduct the entire cost of certain assets in the very first year. Buy a $200,000 piece of equipment for your business, you might be able to deduct it all immediately. Let's meet Sarah, a restaurant owner making $500,000 a year in profit. She's about to pay around $175,000 in taxes. Instead, she buys a new $200,000 SUV that qualifies for her catering business. Under Section 179, she can deduct the full $200,000 from her income. Her taxable income instantly drops from $500,000 to $300,000. Her new tax bill, it's now just $105,000. She saved $70,000 in taxes by losing money on a depreciating asset. Plus, she now owns a $200,000 vehicle that might only depreciate to $150,000 in reality. Let's look at the net result. She spent $200,000, saved $70,000 in taxes, and owns a $150,000 asset. The government essentially helped pay for her to buy a luxury SUV, and this is where things get truly strange. The bigger the purchase, the bigger the potential tax savings. That's why billionaires buy jets, yachts, and art for their businesses. They're not just spending money, they're manufacturing tax deductions. This creates a massive advantage for business owners and investors. While employees pay taxes on every dollar they earn, business owners can buy assets first, then pay taxes on what's left. It's the difference between earning $100 and paying $35 in taxes versus earning $100, buying a $50 asset and paying just $17.50 in taxes on the remaining $50. The system gets even more powerful when you combine depreciation with debt. You could buy that $200,000 SUV with a loan, depreciate the full amount immediately to get the tax savings, and then pay off that loan using pre-tax business dollars. You're effectively using the government's money to help you acquire assets. But this highlights a bigger issue. The system heavily favors people who already have the money or credit to invest in businesses and assets. The wealthy get tax breaks for buying things, while many middle-class workers pay full price for everything and get taxed on their whole salary. So what can you do? First, consider starting a legitimate business, even if it's small. A simple consulting business, a side hustle, or a rental property can give you access to these depreciation rules. That computer, phone, or car you use for work, they can become business deductions that lower your tax bill. Understanding this system is the first step toward leveling the playing field. Thanks for watching. If you found this helpful, be sure to like and subscribe for more content that breaks down the secrets of wealth.